It's Thursday, October 6th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting. Seeing as it was Thursday, it's only fitting we start off with nat gas, which brought its usual fun and games following the report. Initially, when the report came out, it looked like we could have had a top to me, but when we came back up through 302, that left a bear trap here below 3. Now, this suggests that we're going to make a new high, and it could be out of a conventional kind of converging fourth wave triangle, or it could come in a rising wedge diagonal triangle. So I think those are the two most likely scenarios here, and this is a shorter term chart. And here is the bear trap zone below 3, so it's unlikely that we should go back below there if the market's going to trade up towards 310, which is currently my forecast. So I would say, given the time frame of this chart, consolidate for a while, and then probably early in the morning pop and run up and make what could be a significant top here. I'm going to guess now 309 for the potential target on the upside. Looking at the 10-year, all I can say is that the market is still trading below the modified moving average, and it's interesting because we do have momentum divergence. So I think if we didn't just make a low, we're probably close. The recent low was 129.26, and it's not uncommon to have a third wave blowout low right below or above a significant level here. So as long as we're below this average, I've got to proceed on the assumption that this third wave is still in force, and even then the next bounce ought to be just a courtesy situation. So barring an explosive move currently above 130.08, every indication that we're just not done going down in the 10-year treasuries. Moving on to gold. Well, who would think that the gold would trade very similar to the 10-year, but this chart is extremely close. It suggests, honestly, that if gold didn't already bottom 3, it probably should, with a blowout below 1250 early tomorrow. So it doesn't help much, but unless we get back about 1264, we can't call any kind of a bottom. But even if we do get above 1264, I would still want to think it's going to be a 4. So we'll see what happens. That's right where the moving averages and the previous lows. So I suppose if we get above 1264 and really fly, that would be something, and we really shouldn't trade much above 1270, I don't think. Although the fourth of the extended third is 1279. So we could conceivably trade as high as 1279, but we really shouldn't trade above 1270 if the market's going to continue lower. Well, it's starting to look like I'm just going to be totally wrong about this move in crude. And I guess, as I was talking to an associate today, you can't fight the central bank. And if OPEC wants higher oil prices, I guess it's going to be higher oil prices. So we're right up against RSI momentum resistance here, so I think at a minimum probably get another test of the support somewhere in the neighborhood of $50. The really short-term stuff looks dubious, but I don't know just what that means, but it sure looks like it's primed for a pullback. And again, somewhere maybe get a washout of $50 here and then trade higher still. So I don't know that it's terminal, but we need to start to go down awfully soon if it is. The sterling just continues in free fall, and there's just no way the euro can rally. And I came out with this change of heart here this afternoon when we were trading somewhere in the vicinity of 112. It was pretty clear to me that this was just not going to be a bottom, and I suggested we would trade on down towards this falling support line, which is currently now in the vicinity of 111.45. It could get worse, I suppose. Again, not looking at the sterling. It's hard to say, but right now I think 111.450 to 111.40, and we'll see if the market can hold it together there. But clearly not the bottom I was previously anticipating. But fortunately, I did make that change real time during the day, and this is why it's so important, to be flexible and fluid, because nothing is for sure. I mean, we can see why there is some buying interest here. If we draw a conventional trend line across the last two significant lows, it comes through right where the market's stabilizing here. I just have very little confidence that it's going to hold. We'll see, and this is very tricky because of these cascading lower lows, but I suspect as long as we're below 111.90, 95 in here, that this market's going lower still. Look at the E-mini S&P. I just have no reason to change the forecast. It ain't broke, so I'm not going to fix it. Still one more shot for 2160 to 2165, maybe on some news tomorrow, and then the market should just head lower. You can see that there's just really nothing going on momentum-wise. It's always still possible the market's going to break out to the upside, but at this point, it does not look like that event is in the cards. For a little while today, I thought this forecast was just going to work out exactly as forecast, and that remains to be seen. So far, the B wave was just about perfect, and now it's just a question of whether or not this is going to be wave C. There are other interpretations here, but I guess the key is really if we're going to fall below the bear trap that did set up below 48.50, which was something that I in fact suggested on the video last night as a potential setup here. So ideally we would be looking for this market to hold a 62% retracement, which I believe is almost exactly where we're currently trading, which would certainly make for an interesting story. And there we are. Yep, we are right there, currently trading at a 62% retracement, 48.58. So it would be really interesting to see where we are tomorrow. And it could be that this market has already rolled over. I just don't, at this point, have any reason to think that we still don't have one more high coming. Actually, it would be two more under this particular situation. So early spike up, pull back from an overbought condition, and then a final push maybe into the close. And that could be it if it's in fact a rising wedge terminal diagonal triangle in the E-mini NASDAQ. So that's the wrap here for today. Ron Feinstein, New Wave Forecasting, Thursday, October 6th, 2016. Back tomorrow with real-time updates, and tomorrow night with the latest video.